Welcome to this urgent explainer. Exactly 1 year ago today, on July 4th, 2025, a new law was signed that completely rewired how every single American pays taxes. It's called the One Big Beautiful Bill Act. The crazy part, it's been in effect for a full year now, yet millions of people have absolutely no idea what actually changed. If you're still filing the old way, you are literally leaving massive amounts of your own money on the table. So let's dive right into this because we are talking about some absolutely huge benefits.
For starters, how does a brand new $6,000 extra cash deduction sound?
That one is aimed specifically at seniors. That's money staying straight in your pocket before anything else is even counted.
Or what about $10,000? That's the amount that can now be slashed right off your taxable income just for paying interest on your vehicle.
Yes, you heard that right. In a move that honestly shocked almost everyone, your daily commute just became a very real tax shield.
And for those of you who itemize your taxes, meaning you list out your individual deductions instead of just taking the standard flat amount, we're looking at a massive jump in the state and local tax cap, hitting $40,400 for 2026.
Homeowners in high-tax states, your vault is officially open. The days of being brutally capped at 10 grand are completely over.
And perhaps the most famous part of this whole thing, no tax on tips. And no tax on overtime. Right now, millions of people are filing the old way and overpaying on every single paycheck. But this high-stakes briefing is going to give you the exact blueprint to legally keep what is yours. So the crucial point here is understanding not just what this law says, but exactly how to use it.
Section 1. The trillion-dollar secret prevented tax hikes and massive new deductions. Essentially, the One Big Beautiful Bill Act prevented a massive tax hike by making the 2017 cuts permanent while simultaneously adding explosive new deductions for 2025 and 2026.
All right, Mission 1. Reclaim your paycheck. Let's dive straight into the changes affecting the vast majority of workers, getting the IRS's hands off your hardest-earned money. If you clock in, serve tables, or grind out extra hours, you're going to want to hear this.
Okay, so under the old way, every single dollar of your tips and overtime was fully taxed. But the new way, if you work in a customary tip job, think restaurants, salons, rideshare, you can now deduct up to $25,000 in tips from your federal taxes. Meaning, a server earning 20 grand in tips pays zero federal income tax on that money. And if you get Fair Labor Standards Act overtime, you can deduct up to $12,500 of that premium pay. To put that into perspective, say you make 8 grand in overtime and you sit in the 22% bracket, that deduction puts over $1,700 right back in your pocket.
Now, there are rules of engagement here. These benefits do phase out. That phase out starts when your modified adjusted gross income, which is basically just your total income minus a few specific deductions, hits $150,000 for single filers.
For married couples filing jointly, well, that threshold doubles to $300,000. The maximum deductions double as well, up to $25,000 combined for overtime. But listen to me carefully on this one. If you qualify for these, you absolutely must update your W-4 with your employer immediately. Because if you don't adjust your tax withholding, the IRS is just holding your money all year and giving it back as a refund later. Stop giving the government an interest-free loan.
Moving right along to Mission 2, maximizing big-ticket deductions. Let's look at how your driveway and your zip code can legally slash your tax bill. These are the deductions that surprise pretty much everyone.
So the absolutely crucial point here is timing. If you have an older car loan or a loan on a used car, there is zero deduction, nothing. But if you took out a loan on a brand new vehicle after July 4th, 2025, you can deduct up to $10,000 of that interest annually through 2028. With the average new car payment sitting around $760 a month, interest makes up a huge chunk of that. If you paid 6 grand in interest and you're in the 22% bracket, you just saved over $1,300. Just keep in mind this phases out at $100K for singles and $200K for joint filers.
And then we have the state and local taxes, otherwise known as the SALT deduction. If you itemize, this is an absolute game changer. Before 2025, it was brutally capped at just $10,000. Millions of dollars in state taxes were basically invisible to the IRS. But starting in 2025, it jumped to $40,000 and then skyrockets to $40,400 for 2026, and it keeps increasing by 1% each year until 2029.
Let's look at what that means in the real world. Take a couple in New Jersey earning $250K, paying $25K in state taxes and $15K in property taxes. Under the old law, they were capped at a $10K deduction, but under the new law, they get to deduct the full $40K.
Sitting at the 24% tax bracket, this single change puts $7,200 back in the pockets of a middle-class couple in a high-tax state. Just remember, your total itemized deductions need to actually exceed your standard deduction to use this.
All right, Mission 3, automatic cash for seniors and families. If you're 65 or older or you have kids, the IRS has essentially unlocked a bonus tier for your family.
Seniors get a brand new extra $6,000 deduction, and this is vital. It is on top of the standard deduction, not instead of it. If both spouses are 65 or older, that is 12 grand extra. Meanwhile, parents see the child tax credit permanently preserved, preventing a painful drop back to $1,000, and it's bumped up to $2,200 per child. For a family with 3 kids, that's potentially a $3,600 difference per year. Plus, there's an extra 5% bump above normal inflation for the overall standard deduction.
Because of that 5% bump we just talked about, the standard deduction for married couples filing jointly in 2025 hit a massive $31,500. That extra padding alone automatically saves a household in the 22% bracket over $300 in taxes, without you having to lift a finger.
But let's pause the celebration for a second. Every heist has a complication, right? To fund these massive tax cuts and new deductions, something very big was permanently eliminated from the tax code.
Yep, the electric vehicle tax credit is gone. If you are planning to buy an electric vehicle in 2026 or later, expecting that hefty $7,500 federal credit to help lower the sticker price, you need to adjust your budget right now. Effective September 30th, 2025, that federal cash was completely eliminated. State incentives might still exist depending on where you live, but the federal cash is officially off the table.
Which brings us to your tax action plan. Knowing the rules of this explainer is only half the battle. None of these benefits are fully automatic. They require you to file correctly. So here is exactly what you must do.
Step 1. You need to aggressively update your W-4 right now. Go to the IRS tax withholding estimator at irs.gov to adjust for your tips and overtime. Step 2. Save that January vehicle loan statement your lender sends you. Seriously, do not throw it away. Your tax software needs it. Step 3. Crunch your mortgage, state taxes, and donations to see if the new massive SALT cap means you should itemize this year instead of just taking the standard deduction. And Step 4. If you're 65 or older, explicitly tell your tax preparer to claim your new senior deduction because it is brand new and easily missed. The difference between acting on this briefing and ignoring it is literally hundreds or even thousands of dollars every single year for the next several years. So, take a hard look at your own finances. Between the massive SALT increase, the car loan write-off, the senior bonus, and keeping your tips and overtime completely tax-free, which of these massive deductions are you going to use to maximize your return this year? Take charge of your wealth, use the tools available to you, and whatever you do, don't let a single cent of your own money slip through the cracks.
वीडियोस बनाने हैं, फिल्मोरा है ना।